Consolidation is the name of the game today, and yet look around. All you see are these frail legacy systems hanging on for dear life. You came here for the truth, so let me unveil that for you. When most people hear the word debt, they're probably thinking of this guy who is uncomfortably close to me in the background having no money in their pockets. Well, instead, what we should be looking at is a system of control. By making the debt super cheap, every individual jumps on and tries to accumulate as much as possible, but the corporations do the same. And of course, you've got the nations on top of that. And many people see the nations and the central banks as one, but if we separate that and realize what's actually going on, you're going to start to see the bigger picture. I'm going to talk about debt and how this is all interconnected to what we see today. I'm going to highlight some very important points, so stick with me. I got some serious information to talk about in the Money GPS Insiders as well. A lot of detail. Let's get into it right away. Quick update right here about the repo operations. You can look directly at the Federal Reserve's own website, in this case here, the New York Fed, and you can look through here to see the updates. I'll give you this one. It's $369 billion for one single day. I have been covering this extensively, of course, since 2019. If you want a full breakdown, I have done many of those back in 2019. People are asking for explanations. What does this mean? I'm confused. I noticed a lot of people in the comments were stating one thing which is not actually a fact, or they're misconstruing what I had mentioned. Look, this is so important. I'm going to do a breakdown video of it. If you haven't seen the ones from 2019 already, I'll do an update one on it regardless. Maybe this weekend, if not, maybe the weekend after. Regardless, I'm just trying to keep you updated on what we are dealing with right now. This reverse repo operation at $369 billion is one of the highest ever. So of course, there is something very serious going on right now. Like I said, the name of the game is consolidation, and here a US proposal for a global minimum corporate tax of at least 15% met with enthusiastic reception in Europe. Does that surprise you? Of course, they're all going to go ahead with this, whether it's 15%, whether it's 20%, whether it's 10%. And all that matters is that these legacy countries are simply going the way of the dodo bird. They don't even know what they're doing anymore. All they know how to do is to tighten the noose. These corporations will not pay the taxes. You have to understand the way that it works. This is for small and medium-sized businesses that are going to ultimately have to go and jump through more hoops. They're going to have to fill out more paperwork, and they're going to get the squeeze. The very biggest establishments will grow bigger. If you take these huge companies, Facebook and Microsoft and all of these big establishments, and you split them up because they're a monopoly, what happens? Well, of course, all of them become even more powerful, less scrutiny on them. This happens over and over again, but the people simply don't realize it. They're talking about progress here. They're saying that we're going to have this in the summer. We're going to get a deal done. And many people will feel good about that because they're raising taxes on the rich. But if you look at it very closely, unfortunately, it's nothing of the sort. The supranational entities like the IMF and the World Bank and so on and the biz, of course, ultimately have way too much say in what happens here. And then you've got the groups meeting with the G20 and the G7 and so on. These establishments, these institutions, these supranational entities are able to have too much say in what happens in an individual country. If your country wants to impose a corporate tax, it should be done there. It should not be done on the corporate level. You got to understand how very serious and dangerous these policies really are. You may have heard of this already, but Bitcoin had come down. This is the second time in a short period that it was hammered down. In this case here, it was some extra squeeze from China. I'll read you just a quick little quote. And this is coming from the actual Chinese vice premier, okay, one of the highest positions in China right now. And this is his quote. "We should be more alert and look for potential risks. we should crack down on Bitcoin mining and trading activities and prevent individual risks from being passed to the whole society. That's what they claim, okay? We don't know what's actually going to happen. Right now, the miners, which by the way, I think is something like 40% of all Bitcoin mining has taken place in China, it's getting the squeeze from there. Now, who knows what's going to happen out of this, but certainly the market got spooked as a result. And this is all based around what I'm talking about here with this consolidation. You can see the same rules being applied across the board. You're getting the squeeze here on taxes, you're getting the squeeze here on this and that, and ultimately you can live in one place or the other, but all of the same rules are there. Now, if you look at the United States as an example, things have really changed over the years. Some may want to leave New York and California to go to Arizona, Florida, Texas, but a lot of the rules have changed there as well. And you look at that country to country and start to realize that maybe there's something else going on. Maybe it's not the countries and my politicians and so on making the rules. Maybe there's a deeper level to this. This is an article covering what we've been talking about for quite some time, but essentially Americans are returning to the restaurants, bars, and other dining places as the restrictions come down, adding new strains in food supply chains. So what I've been finding, not just from this article, but from others as well, is that you've got all these businesses that see that there's a shortage, that see there's supply chain issues. And so what are they doing? They're ordering even more stuff. And of course, that's creating an even bigger imbalance. So this is something that will probably continue for the next little while. You know, it doesn't matter where you look at. Even cardboard is in shortage, if you can believe it or not. Cardboard, I don't think we've ever heard of that before. Over the last 6 weeks, we have seen the market come roaring back faster than anyone would have anticipated. And now they're dealing with similar issues. The shutdown and now the reopening. Of course, they completely shut down the economy. So certainly there would be issues, but who knows what's going to happen? Are they going to go into another shutdown in a few months from now? Who knows? We're going to have to see. But ultimately, there are so many different levels of problems today, and that has helped to push these commodity prices higher. Remember that. There's some really key information here in this article, and it's talking about some quotes from the governor of the Bank of Canada. Okay, so imagine the equivalent of your Jerome Powell from the Fed, and you're getting some really good stuff here. This is a quote. The biggest domestic vulnerabilities are those linked to imbalances in the housing market and high household indebtedness. These are not new, but they've been intensified. You're getting that from the governor. You don't hear that kind of truth coming out the Fed. I'll tell you that much. And this is something that I've noted 1,000 times before, not just about Canada, but other places as well. And they're actually highlighting it. I mean, I can't believe it. So they mention, the cost of the debt and actually suggest in here, in his quotes further down, he actually says interest rates will have to go higher at some point. You don't ever hear about that from any of these financial institutions, let alone the actual central bank. So definitely be careful about the debt that you have, because there's a very serious issue when it goes higher, let me tell you. First thing we need to discuss, number one, is that there are imbalances everywhere. Everywhere you look, you've got these imbalances, and that creates these distortions and dislocations in the market as well as the economy. Number two is that we have debt levels that are simply impossible to ever pay back. We must acknowledge that. And then number three, markets. Let's be realistic here. Markets have not priced in higher interest rates. You as an individual, though, you should keep that in the back of your mind. That is so critical because we know that that's going to have to happen at some point. And if it does, how do we respond? So you got to get your stuff in order right away, because that's going to give you that peace of mind that you're going to be okay because you've got everything ready to go. Doesn't mean you're going to sell off your whole portfolio, take all those stacks of lumber, put them under the mattress because you need to prepare yourself. No, but you're just making sure that you're not caught off guard. That's the key. I got a lot of data here from Goldman Sachs that basically breaks down what's going on with hedge funds, how things have changed, the 50 stocks that matter most to hedge funds. I know the font is really small. Let me see if I could zoom in on this. Facebook is number 1, by the way, and you could just go through here. The link will be in the description. I'm sure you can't see the font is too small, but let me just read the names. Facebook, Microsoft, Amazon, Alphabet, Alibaba, Visa, MasterCard, Apple, and you go down the list, okay? The biggest names always, but Facebook at the top. We haven't seen that in quite a while, okay? Now, the return year to date on that has been 15%, so it has performed very, very well. The most popular hedge fund long positions have struggled in the past few months. So you could see in this particular case what had happened, but you basically have to look at it in comparison. They're doing that with the S&P 500, but it all depends. This is just something that I wanted to show you, just tell you what's happening on the institutional side, what's happening on the retail side, because we're going to talk about that more in a second. Hedge funds rotated from growth toward value in the first quarter of 2021. You do not see that often. Value is, not really to be considered anymore. Apparently, it's all about growth, growth, growth. Hedge fund rotation from growth to value has also taken place at the sector level. So they just break it down, infotech, comm services, and so on, if you're interested in that. Funds have reduced weight in extremely high growth, high multiple stocks. That's on the left-hand side. On the right-hand side, hedge funds added to positions in the FANG stocks in early 2021. So you're getting, a little bit of this disparity, but it all depends on the hedge fund, depends on what they're doing. You got to look into more depth. When I see this type of stuff, I want to bring it to you, but at the same time, there's more depth to that I think people should be aware of. I don't have time to get into today, but don't make decisions. The point I'm mentioning all of this is basically you don't make decisions based on what the hedge funds are doing or because you saw it on Reddit or because, Jim Cramer's talking about it or Warren Buffett has in his portfolio. You've got to have everything in line. You've got to have everything in line. One of the things that I've been thinking about doing is actually including some of the personal technical analysis on some of which I talk about. So if I'm going to bring up the FANG stocks, I'm going to show you the technical analysis behind that and say, does it look bullish or bearish or so on? I just don't want it to be interpreted as financial advice. That's my worry anyway. Many popular retail trading stocks have declined alongside hedge fund VIP underperformance. Look at the lighter blue line on the left chart. You can see how it's come down from its peak very clearly. Right-hand side, retail investor trading activity appears to have declined in recent months. So there is actually less activity coming from there. And that's important to note as well, because where the money had been going, there was so much activity on Robinhood and so on. And now things have calmed down because of GameStop and so on. Stocks with the largest increases and decreases in hedge fund popularity last quarter. Viacom CBS is right there. Baidu, Twitter, and so on. These stocks here were part of the whole Archegos fiasco. So we need to pay attention to that. And as I mentioned, George Soros bought into those companies, right? Why? Because like Templeton and like others, they have said, buy when there's blood in the streets. Year-to-date performance on most popular long positions and the most concentrated short positions by sector. Energy at the very top of the list, but I don't think that you needed me to tell you that. Obviously, we've been following that very closely. They're talking about growth in general, and I do think that ultimately more and more people will be getting into growth no matter what changes. Larger short positions here, Tesla, AMD, and so on. Look, I could go into depth on all of these. I don't think that there's enough value, but I just wanted to give you quick updates on this. This was really what the video was about. And this here is just something that we have seen numerous times, okay? IPOs are crazy. Now, you can make a lot of money on the right IPOs, but you can also lose a lot of money on those IPOs as well. They talk about Snowflake, $3.9 billion IPO, Airbnb and DoorDash, and so on. All the investment gains have been swallowed up by big institutions that got in before the stocks were openly traded. So if you're going to wait to get in, a lot of those times, doesn't turn out very well, does it? So be aware of that, okay? Watch out where your money's going. That's the whole point of all of this. I hope I was clear about that. If you haven't already, you definitely want to join the now thousands of people that are part of the insiders. I've got thousands of people on this list. And what does it do? Well, it enables me to get to you directly and you to get to me directly, where I can share information with you. They are shutting off channels left, right, and center. And quite frankly, that is not okay. So I have been emailing 5 days a week, getting you the video of the day. Later on, it's going to contain original content. I'm going to have a newsletter surrounding that information. And of course, it's free. Of course, all that information is going to be free for you. I'm planning a lot of changes. These are just some. You've seen the green screen. You've seen little things been happening. I want to do my part. I want to do as best as I can with what I've got. Join the insiders. It's very simple. Just go to themoneygps.com, fill in your email address, and you'll get the emails from me. If you support the channel, give me a thumbs up. I really want to thank you for that. And my books. Check out the books. They're in the description, or you can go to themoneygps.com as well. Very important stuff in there. And if not, if you haven't watched it, click the video. Definitely want to see you over there as well. Take care.